Hey everyone, welcome back. Ready for another deep dive?
Always ready.
Well, today we're getting into the world of stock trading
Oh, yeah.
through the eyes of, you could say, a legend, Jesse Livermore.
Definitely a fascinating figure.
Absolutely. And we're using this book, Reminiscences of a Stock Operator.
Classic.
It's by Edwin Lefevre, based on Livermore's life, to kind of guide us. So we're going to follow his journey, starting as a, quote, board boy.
Wow.
All the way to becoming this Wall Street giant, seeing the massive wins, the crushing losses, the whole thing.
A real roller coaster ride.
Right. But here's the thing. He didn't just play the market, he dissected it.
Yeah, he had a method.
Yeah, he developed his own style, relying on observation, intuition.
Almost like a sixth sense for how stocks behave.
Exactly. So to help us break all this down, his world, his philosophies, we've got our financial markets expert here.
Happy to be here.
So I think what's really amazing is that his fascination with numbers and prices, it started so early. Like 14 years old, he's working as a quotation board boy.
Wow.
Essentially posting prices in a brokerage office.
Can you imagine?
Surrounded by all that ticker tape, the numbers constantly changing, the energy.
I mean, it's no surprise he was captivated, especially back then. No computers, no instant information.
Right.
It was all about feeling the pulse of the market in real time.
Totally. And, you know, Livermore was known to be super quick with figures. I mean, finished 3 years of arithmetic in 1 year at school.
That's impressive.
But these weren't just abstract numbers to him.
Right.
Even then, he was trying to understand the why, the reason behind those price changes, looking for those patterns.
Trying to crack the code.
Yeah, like sensing the market breathe, you know, expanding and contracting.
Absolutely.
But his story, it takes us from this brokerage office to a much, let's say, more intense world.
Okay, where's that?
The world of bucket shops.
Oh, wow, yeah.
These were basically like betting parlors for stock prices.
Not exactly known for their integrity.
Right, a lot of shady stuff going on.
But they were a training ground. High speed, intense.
So he was able to experiment, make those rapid trades, learn from his mistakes.
And he mastered things like tape reading, pattern recognition, all without fancy algorithms or computer models.
Pure instinct.
Yeah, and the ability to decode that ticker tape link.
Like he was good. I mean, really good.
Oh, yeah.
People called him the boy plunger for a reason.
I've heard that name.
There's even this story about him manipulating inactive stocks, outsmarting 5 bucket shops at once.
Bold move.
He knew how the market worked, predicted reactions, used it to his advantage.
Clever, but risky.
Right, and that early success, it had a downside.
What do you mean?
Well, bucket shops weren't exactly ethical, and Livermore himself took some big hits.
It's a dangerous game.
So those wins, as impressive as they were, they didn't necessarily translate to the real stock market.
Exactly.
Huge difference between gambling and speculation.
A lesson many learn the hard way.
And that's what happens next. In Livermore's story, he moves from that adrenaline rush of the bucket shops to the more established world of Wall Street.
The big leagues.
Starts trading in legitimate brokerage houses, and surprisingly, struggles.
Really? Even after all that success?
Yeah, it's a bit of a puzzle, right? Why would someone so successful in one arena falter in another?
I'd say different game, different pace, different rules.
The market structure, dealing with real stocks, the New York Stock Exchange, it was a whole new ballgame.
It was a reality check, forcing him to evolve his approach.
Exactly. He had to confront the limitations of his bucket shop knowledge and develop a more mature, disciplined style.
A necessary evolution.
And this is where a key figure enters his life, an older trader named Partridge, nicknamed Turkey.
Turkey, huh?
Because of his broad chest and the way he strutted around the brokerage office, apparently.
Okay, I can picture it.
Partridge embodied this essential trading lesson, patience.
The virtue so many traders lack.
Right. Known for being careful, observant, never jumping on rumors or acting impulsively.
A rare breed.
Livermore learned a lot from watching him, especially about avoiding overtrading, waiting for the right moment.
Timeless advice, especially in today's world of high-frequency trading and instant gratification.
Totally. And Livermore himself admitted his early losses, mostly because he didn't grasp the difference between gambling and speculation.
The classic trap.
Something a lot of people still struggle with.
Yeah, it's easy to get caught up in the excitement.
Right, but gambling relies on luck, chance, chasing those quick wins.
Whereas speculation involves calculated risk, research, understanding how the market works.
And this leads us to one of Livermore's biggest takeaways.
I'm listening.
The importance of studying general conditions, taking a position, and sticking to it.
Having conviction in your analysis.
Exactly. He also talked about finding the line of least resistance in the market.
Meaning?
Aligning your trades with the main trend, whether it's bullish or bearish.
Riding the wave, not fighting it.
Precisely. And these skills, these principles, were really put to the test during some of the most, well, let's just say chaotic times in financial history.
I'm intrigued.
The 1906 San Francisco earthquake and the Panic of 1907.
Oh, wow. Yeah, those were defining moments.
Absolutely. And it's where we see his market reading abilities really shine.
I can't wait to hear about it.
Like right before the earthquake, he felt this urge to sell Union Pacific.
Interesting.
Even without a clear reason, he just felt something wasn't right.
Like a gut feeling.
Yeah, he later described it as unconsciously picking up on signals the market was sending out.
Signals that often precede major events, even those unrelated to finance.
It's like the market can sense those ripples in the world, you know?
Absolutely. It's this interconnected web of information and sentiment.
So he ends up making a good profit shorting Union Pacific before the earthquake.
Smart move.
But here's the thing. He later admitted he regretted not trusting his gut fully.
Oh, what happened?
He got back in too soon and lost a significant amount.
The classic mistake of second-guessing yourself.
And then there's his analysis of the 1907 panic. Incredibly insightful.
What did he see?
He understood how fear and panic can drive the market, how crucial monetary conditions are.
It's like a domino effect. One thing triggers another, and suddenly you have a full-blown crisis.
Exactly. And there's this great story about him in Palm Beach during the panic.
Okay, set the scene.
Everyone around him is bullish, optimistic, but he's predicting a downturn.
Going against the grain.
He's watching Anaconda Copper, and he just knows something's off.
So he trusted his own observations, even when everyone else disagreed.
He wasn't swayed by the crowd. He believed in what the market was telling him.
A valuable lesson for any investor.
So we've seen his early wins, his struggles, his incredible insights during these major events.
It's quite a journey.
But there's another side to his story, a more, let's say, controversial aspect.
I'm all ears.
The world of market manipulation.
Okay, now we're getting into interesting territory.
It's often associated with unethical practices, but it can also involve strategic moves to influence stock prices.
A lot of gray areas there.
Exactly. And Livermore actually gives us a glimpse into this world.
How so?
Both from watching figures like James R. Keene and from his own actions.
I've heard of Keene, a master manipulator.
Livermore learned a great deal from observing Keene orchestrate the distribution of amalgamated copper.
For Rogers and Rockefeller, right?
Yeah, it was a case study in creating a market for a stock.
Keene was a genius at building perceived demand, drawing in the public.
It's important to consider the context, though.
Meaning?
This was a period of massive industrial growth. People were eager to invest in the future.
So he tapped into that excitement, that desire to be part of something big.
Right. And Livermore himself became a sought-after manipulator.
No way, really.
Known for his ability to generate market demand for specific stocks.
So what was his approach?
He understood crowd psychology, timing. It was all about creating the illusion of organic demand.
Making it seem like something was hot without artificially pumping it up.
Exactly. And he believed that if a company had solid fundamentals, manipulation could just speed up its rise to its true value.
An interesting perspective.
One of the most fascinating stories about his manipulation skills involves the Consolidated Stove deal.
Oh, tell me more.
He was asked to sell a large block of stock for promoters who had misjudged the market.
So they were stuck with a lot of stock they couldn't move.
The market wasn't biting?
I can see the problem.
And he agreed to help, but with a unique approach.
What did he do?
He knew dumping the stock would crash the price.
Classic mistake.
So instead, he used rumors, his reputation, to generate unexpected buying pressure.
He played the market like a chess game.
It wasn't trickery. It was understanding how perception shapes reality in the market.
A self-fulfilling prophecy.
Exactly. He created this illusion of demand, and it worked. He sold the entire block with minimal effort.
Wow, just like that.
Other traders were left wondering, how did he do that?
That's incredible.
A true masterclass in market psychology.
So he manipulated the market, but in a way that benefited everyone involved.
That's the key. He didn't create artificial hype. He amplified existing value.
It's a fine line, but he seems to have walked it expertly.
But this brings us to another crucial lesson from Livermore.
Okay, let's hear it.
The need to think for yourself, especially when there's so much information flying around.
In the age of information overload, that's more important than ever.
He was constantly bombarded with tips, rumors, But he always stressed filtering that information, relying on your own observations.
Don't just follow the herd.
Right. He had this great way of putting it. He said, "It is much easier to watch a stock than to study a company's reports."
A meaning.
He believed the market itself reveals its secrets if you know how to read them.
Like reading the language of the market.
Exactly. It's recognizing that the market reflects collective psychology.
By observing its movements, you gain insights into what traders are thinking, what they're expecting.
And he even had these funny stories about people, even seasoned investors, who made a killing by copying his advice.
Soppering, what's that?
Doing the opposite of what he suggested.
Oh, that's funny.
It just goes to show even the best can be wrong sometimes.
And following anyone blindly, even someone as successful as Livermore, is a risky strategy.
Always do your research, form your own conclusions.
Absolutely.
There's this great story about Borneo Tin. His wife almost fell victim to a tip.
Oh, what happened?
Someone told her it was a sure thing, the stock was going to explode.
The classic pump and dump.
Livermore was skeptical, though. He suspected manipulation.
So what did he do?
He shorted the stock, bet against the tip.
Well,
He was right. The stock plummeted. His wife was saved from a huge loss.
that's a close call.
It highlights the importance of skepticism, especially with information designed to influence your decisions.
Don't take anything at face value. Do your homework.
Exactly. And speaking of doing your homework, we have to talk about the New Haven Railroad collapse.
Oh, that was a major event.
A cautionary tale about blindly trusting insider statements.
The company's rapid expansion, fueled by questionable acquisitions, was initially hidden by all this positive PR.
They silenced anyone who disagreed, encouraged people to hold on to the stock, even as warning signs were flashing.
It's a reminder that companies and individuals can manipulate perception, especially in the financial markets.
And it's not just historical, it's still happening today.
Absolutely. Information is power, and it's often used to sway investors.
This reminds me of Livermore's experience with the coffee market.
What happened there?
He had this potentially very profitable position, but government intervention messed everything up.
The unpredictable nature of external factors.
We can't control everything, but we can control how we react, how we adapt.
Resilience is key in the market.
So Livermore's story, it's this roller coaster of highs and lows.
Big wins, crushing losses, moments of brilliance, and costly blunders.
But through it all, he had this unique perspective, almost like he could see into the market's soul. And that's what we'll explore deeper in the next part of our deep dive.
I can't wait.
We'll delve into his understanding of market psychology, his strategies for dealing with manipulation, and those timeless lessons that still resonate with traders today.
Sounds like a must listen.
Stay tuned.
He believed that the market was driven by, those human emotions.
Yeah.
Fear, greed,
A whole spectrum.
despair.
Exactly.
And that by understanding these emotions,
Right.
you could kind of anticipate those market movements.
So almost like predicting human behavior.
In a way, yeah.
And speaking of understanding emotions,
Okay.
let's go back to Livermore's experiences with market manipulation.
Yeah.
He wasn't just observing these tactics, he
Yeah.
was participating,
Oh, wow.
using his knowledge of psychology to influence stock prices.
That's interesting.
And manipulation has always been, I guess, a part of the stock market.
Yeah,
But the line between what's ethical and unethical, that can be blurry.
very much so.
Livermore understood that. He saw how manipulation could be used for good or bad.
Right.
To create real value or to exploit, unsuspecting investors.
Both sides of the coin.
And he often compared it to a theatrical production.
Really.
He was about understanding the mechanics, the audience, knowing how to create that illusion.
So timing was everything.
Absolutely. And creating that sense of organic demand.
Yeah, that's key.
It wasn't always about, artificial hype.
No.
He believed if a company had strong fundamentals,
Right.
manipulation could help it reach its potential faster.
Okay, I see.
So there's this story about a group of promoters.
Okay.
They approached Livermore. They were struggling to sell a big chunk of stock in a company called Consolidated Stove.
Consolidated stove. Okay.
They overestimated the market's interest. The stock was just sitting there.
So they had a problem.
They needed help. They needed to generate demand.
I see.
So they turned to Livermore, hoping he could work his magic.
Yeah, he was the go-to guy for that kind of thing.
And he agreed, but with a unique approach.
What did he do?
Instead of pumping the stock with, artificial hype.
Okay.
He used his reputation, a series of calculated trades, to create this impression of buying pressure.
So he made it look like there was real demand coming from multiple sources.
Exactly. He understood if he could convince the market he was bullish, others would follow.
A self-fulfilling prophecy.
Exactly. And it worked.
Right.
He sold the entire block. Minimal effort.
Wow, he must have been good.
Other traders were baffled.
I bet they were.
How did he do it?
Yeah, that's the question, right?
A true lesson in how perception shapes reality in the market.
Fascinating.
And it's important to note, he didn't create artificial hype.
No.
He amplified existing value.
He just gave it a little push.
A nudge in the right direction.
A nudge, yeah.
But it brings us back to this idea of thinking for yourself.
Yeah.
Especially with so much information out there.
It's overwhelming sometimes.
Livermore was bombarded with tips, rumors. He always stressed filtering that information.
Right.
Trusting your own observations.
Don't just blindly follow the herd.
And he had this great quote. He said, "It is much easier to watch a stock than to study a company's reports."
Interesting.
He believed the market itself reveals its secrets if you know how to read them.
It's like its own language.
It's recognizing that the market, it reflects, collective psychology.
Yeah.
By watching its movements, you see what traders are thinking.
What they're expecting.
Another key takeaway, understanding market conditions.
Right.
Livermore, he was a master at reading the tape.
Yeah.
He believed the market tells you when to buy, when to sell.
If you know how to listen.
To identify the trend, what he called the line of least resistance, and align your trades with that trend.
Don't fight the current.
And sometimes the best trade is no trade.
Really?
The market's too unpredictable.
Sometimes it's better to just wait.
Wait for a clearer opportunity.
Patience.
Patience.
That's the key.
One of Livermore's most famous quotes.
Okay, what is it?
A man may beat a stock or group at a certain time, but no man living can beat the stock market.
Wow, that's powerful.
What do you think he meant by that?
It's about respecting the market.
Yeah.
No matter how skilled you are.
You can never fully predict it.
There's always element of randomness.
Unforeseen events.
It's humbling.
You have to respect the market's power.
Except that you won't always have the answers.
And Livermore, he learned the hard way. The dangers of leverage, debt.
Oh, yeah.
Had periods of immense wealth.
But also crushing losses.
Financial ruin.
Leverage magnifies everything, gains and losses.
It's a double-edged sword.
So use it responsibly.
Livermore's story, it's a cautionary tale,
Yeah.
but also a source of incredible insight.
A lot to learn from his experiences.
He had a unique way of seeing the world.
What stood out to you the most?
His experiences, even from a century ago, still resonate today.
Yeah, the market changes.
Technology advances.
But the fundamentals stay the same.
Livermore wasn't just a trader.
No.
He was a keen observer of human nature.
He understood people.
And that's what made him so successful.
His insights into psychology, manipulation,
Timeless lessons.
they transcend any time period.
So as we wrap up this part of our deep dive,
Okay.
I want to leave you with this thought.
I'm listening.
Remember that quote about no man being able to beat the stock market?
Yeah?
But Livermore also believed anyone with the right knowledge
Right.
could achieve success.
It's not about beating the market.
It's about understanding it,
respecting it
finding your own path.
in its ever-shifting landscape.
That's the true legacy of Jesse Livermore.
Not just his wins and losses.
But his insights into the human side of trading.
Those timeless principles that still guide traders today.
Absolutely. When we were talking about Livermore and his manipulation of consolidated stove,
Yeah.
I kept thinking about those graduated calls he used.
Right, to make it look like, organic buying pressure.
Sounds really clever.
Oh, it's all about slowly increasing that buying pressure.
Oh.
Making it seem like, genuine demand coming from different places.
So other traders see the price rising.
Exactly.
They don't want to miss out.
Classic fear of missing out.
And that kind of pushes the price up even more?
Exactly. It's subtly manipulating how the market sees the stock's value.
So it's not just about brute force.
No, it's more nuanced.
It's almost like an art form.
You could say that. It requires understanding psychology.
Yeah.
And market mechanics, how everything fits together.
And Livermore, he had a knack for it.
He did. He knew how to time those buys and sells.
To get the effect he wanted.
But of course, we have to remember,
Right.
manipulation can be used ethically or unethically.
And Livermore, he always said,
Yeah.
as long as the company's fundamentally sound,
That is.
manipulation's just, speeding things up.
Helping it reach its true potential.
But it makes you wonder.
What's that?
How can someone who's, not a financial expert, how can they protect themselves from being manipulated?
That's the million-dollar question.
What are the red flags?
But one of the biggest ones, sudden price spikes for no apparent reason.
Okay.
Especially if there's, a lot of positive news or rumors suddenly circulating.
So it's all about being skeptical.
Absolutely. Don't just jump on the bandwagon.
Do your own research.
Look at the company's fundamentals.
Their earnings, their management team.
Don't just get caught up in the hype.
Especially on social media.
Right. It's easy to get swept up in that.
So it always comes back to thinking for yourself.
Livermore's mantra.
Don't follow the crowd.
Or someone else's advice blindly.
No matter how successful they seem.
Develop your own judgment.
Based on, solid research.
Understanding those market dynamics.
And, we've talked about Livermore's ability to read the market.
His insights into manipulation.
The importance of independent thinking.
Yeah.
But his story's also kind of a cautionary tale.
In what way?
I mean, he had immense wealth.
Yeah.
But also devastating losses.
Financial ruin, even.
So what can we learn from his mistakes?
Well, it shows that even the best traders, they're not immune to losses.
He made mistakes, some costly ones.
Especially with leverage and debt.
It's a reminder about risk management.
Knowing your limits.
Not overextending yourself.
No matter how tempting it seems.
And sometimes it seems like he struggled with emotional discipline.
Oh, yeah. Emotions can be a trader's worst enemy.
He let fear or greed, get the better of him.
Leading to impulsive decisions.
That cost him dearly.
It's a common trap.
The market's a roller coaster.
It can really test your nerves.
So Livermore's story, it's a reminder to develop that emotional resilience.
Stay calm.
Stay objective.
Even when the market's going crazy.
So for those listening who want to learn more about Livermore.
About his philosophies.
Where should they start?
Well, Reminiscences of a Stock Operator.
Of course.
It's a classic.
It's not a technical manual.
No, but it gives you a glimpse into his mind.
Is it right?
Those timeless principles.
And there are biographies, analyses of his career.
They provide more context.
It's amazing how his experiences, even from so long ago,
a century ago,
they still resonate.
The market's changed.
Technology's different.
But the human element's the same.
The fear, that greed.
As the hope, the despair.
That's what drives the market.
It hasn't changed.
And that's why his story is still relevant.
It's not just about, technical analysis.
About your algorithms.
It's about understanding people.
Recognizing patterns.
Having the discipline.
The resilience.
To navigate those ups and downs.
So to wrap up our deep dive into Jesse Livermore, I want to leave you with this.
Okay.
His story, it's about human ingenuity.
The allure of risk.
And those lessons we learn.
From triumphs.
And failures.
In the financial markets.
Thanks for joining us on this journey.
It's been a pleasure.
Keep exploring.
There's always more to learn.
The market, like life.
It's a constant process of discovery.